How can we use this stuff? What's most important, okay? It's really all about balance. Balance is really what we can understand. It's what we can identify. And what we do relative to balance, that's what's meaningful information to us, okay? Where we have balance, we have an area of established value, so it's a market we can understand, okay? It's different from simply using price action, as we will come to know. And bear with me with all this. We're all going to just bring it all together and continue to just build and build and build. These distributions, as Garrett would call them, high volume nodes on a volume profile, balance areas, they're the foundation for how we're going to start to understand market movement, okay? How did you know what to expect in the car auction? How did we know that price would revert back to, an area of established balance and whatnot? It makes sense when we think about it from an auction perspective and what motivations of buyers and sellers would be. So we defined value, 70%, okay? So where 70% of the most trading occurred. Typically what we'll do is it'll be from the point of control, and then you just find 70%, but the computer does all this for us. But now, sometimes there is no real value. Remember how we attached balance and kind of value together, like the consolidating area? If the market is just trending, do we really have balance? No, we don't have balance. We have imbalance. And when we have that, we don't actually have a proper measure of value. One of the things we're going to talk about is the truer the measure of value you can get, the more effective you're going to be. The better your hypos are going to be, the better your risk-reward assessment is going to be. Okay? So there's 2 days here, but we're going to focus on this first day. Okay? What happened on this day? Somebody walk me through if you can. I'm kind of pressing you to kind of really take a step forward here. Garrett will do it.
So you're talking about the first
day one. What happened?
So it looks like it opened at the high.
Yep.
It might have wicked up. I'm not sure if it did that first or later, but it looked like it traded around that first node, or that kind of between where that first line is and where it opened, perhaps for a little bit.
Yes.
And then probably then traded lower.
Yes.
And then even lower. Probably got stuck for a longer period of time around right where you are there.
Yep.
And then it traded up and finished near the triangle.
Exactly. Okay. So this day had kind of multiple shifts in what was going on throughout the day, right? And Garrett nailed it. Look at this. Here's how the day unfolded. I split out the profile so we can see each 30-minute period. We balanced. We did have that little wick up right off the open. We traded down very hard. We put in an excess at the low. We consolidated, and then we broke above that little excess, above that lower balance area, and went a little higher. That's what unfolded that day. So value does not really match this day because there was so many different condition changes, if you will, within this day. One thing that I can do is literally right-click on this G period right here, where I would call this day 2 main areas. We have a balance area here, and then we have a balance area here. Okay, we may have excess and single prints in different areas, but that's generally what happened. Because what do we care about? Balance. Remember, everything else. It's almost like I haven't come up with a great analogy for it yet, but it's almost like I keep thinking about colors. Maybe it's because I'm a painter, but it's like black. It's not really a color. It's the absence. It's something that doesn't reflect any color back at us, right? That's kind of what a trend is to me. It's just an area in between balance areas. It's really nothing. So once we split this out, take a look at this. Now the software said, okay, you want to treat these as separate days. Got a nice little, take a look at the value area and the point of control there. And now look at this value area. And notice what This whole time, remember we've had 2 days up here. We've been focusing on day 1. Look at this value area low, value area high, not representative of that day. Now look at that. And look at what day 3 did. Look at how it traded relative to the lower distribution of day 1. It totally defined day 3's movement, that value area. Okay. Single prints, we talked about that. It's a form of excess. It's a form of rejection. Where are the single prints here? I see 3 areas of them. They can be in the middle of the profile like these two, or they can be at the edge like we talked about when we first defined them. Okay. Poor highs and poor lows. Okay. It's a lack of excess. It's a lack of single prints. It's a lack of that clear rejection at an area on a profile. It signifies likely continuation. Okay. This entire course, my goal is to not cherry pick examples and just like go through and show perfection. So here's the most recent 2 poor highs or lows. In this case, they're highs in crude oil, which is the market I focus on. I circled them there for you. Okay, you can see we have excess on the low. It's a poor high, GH. There's no excess at the high. That's a poor high. AE at this high. Unless I skipped one, those are the only 2 that I see, okay? This is not a poor low because it actually goes further than I took a screenshot. What can we also see that happened to those poor highs in resulting price movement? They got revisited. They got taken out. This one happened on the very next day. We opened, and it actually took until the final period of the day, and whoosh, we kind of ran through there and what we would call cleaned it up. Okay. This one here remained. A whole day went by where we filled in here, traded around, closed back here. This day, again, continuing to migrate lower. But then this day, look, we find the low of day at the point of control, and we start to actually build value higher. This day rejects the value low, build value higher. And then this day, that transition there leads us to a gap up and just totally taking out that poor high up there. Okay. A poor high or poor low, we expect them to be revisited within the developing session on the day, within the following day, like we saw on the first example. We took it out the very next day. But even when we leave a poor high like that, in your analysis as you continue, you keep that in the back of your mind that, we may head back up there and take that out. It doesn't mean I'm just going to start getting long at everything that starts to tick up. No. But it does mean that as you're synthesizing a hypothesis and trying to figure out a strategy, you've got that in mind as perhaps a target. Very, very often, these aren't very good examples of it, but very often you'll have a poor high, and all the market needs to do is just go wick that area, and then it can actually go lower. It just needs to accomplish that. It's very weird. So what they can tell us also, this is kind of counter to the fact that it needs to be revisited, but it's also a market that's simply too long or too short. If we think about the inventory of a market, it's where the market's trading up. Perhaps temporarily, those buyers kind of run out of steam, and perhaps the sellers get aggressive, but not so aggressive to where we think it's a major turning point. It just kind of starts to drift lower from lack of demand from buyers, for example. We leave a poor high. We were temporarily too long. We need to correct that inventory, flush out some weak hands in the market, and then perhaps at a later time, whether it's the following day or as we saw, 4 days later, we can go take that out. Gaps in terms of market profile, people, only considered a gap. We don't care where the closing price was, so to speak. We care about, are we opening outside of the entire range of the prior day, yes or no? That is a gap or no gap, okay? I think most equities people really look at the the close to the open, right, in terms of a gap?
Yeah, that would be considered a gap.
Yeah, yeah. For market profile, only outside the range we consider a gap. Developing profiles on the day, okay? We can use the same principles we've discussed so far to imagine, okay? Creativity and imagination is actually a really good trait of a trader. It's something that I think doesn't get talked about very often, but being able to visualize and be creative enough to foresee some things can be very powerful. So we can use the principles we've talked about to imagine the likely completion of even the developing profile on the day, okay? So gap profile from last side, split it out to see its developing profile, okay? So here it is, and this is a gap down because we open right here, which is outside of the prior day's range. Let's split it out. What can you tell me about this day as it developed? Someone other than Garrett. This day.
First one?
The third day, the one that we've split out here. What walk me through that day like Garrett did before.
It's like price open to prior day's value rate.
From 2 days ago, that's correct.
And then it established value there, and then went through an imbalance to the prior day's low.
Yeah, we closed the gap, exactly. One thing I'm looking for along the lines of developing profiles, market profiles specifically, and what we can imagine the likely completion of the profile. By completion, I mean kind of like what happens into the rest of the session at a certain point in time based on what's developing in that profile. I'll go ahead and tell you. Look at these highs here. Look at those 3 periods that formed a what? A poor high. There was no excess at the high. We opened, we traded up, we went all the way down. We put in some excess at the low. We traded up. 2 periods touched the same tick as that high there, and we traded all the way back down to the lows. But I can tell you, I would have been looking to be a buyer in that area. Not that we'd reversed from the highs and following price and thinking we're headed lower. We're developing a poor high right here that this market eventually, you can see this almost formed like an ascending type of wedge. It's the same concept, an ascending wedge, and a lot of times a poor high or poor low type of structure. So boom, into the close, that's what the market needed to accomplish. It was.
So the only axis you consider here is on the, what is it, third column there? The last, on the bottom?
The only axis?
Axis, yeah.
Oh, yes, absolutely. So if we were to scrunch this day, which actually I have it on the prior slide, we didn't have this until the close. It looked like that with this ledge right here, this poor high, but we did have this two ticks of excess on the low. All right, I think this is one of the last topics, and we'll get out of here. Value migration, okay? How value is established relative to the prior day or whatever period you're looking at, year to year. You know, we could really, 5 minutes to 5 minutes, you could make little 30-second profile periods and group them into 5-minute chunks. You can do whatever you want with this. It gives us better information than price bars alone. Something we'll talk about in the future is that there have been a lot of studies done on what's called serial correlation between closing prices in financial markets. And nobody can find, you know, there's essentially zero serial correlation. You can say just because we close higher one day, there's essentially a 50-50 chance the next day if we close higher the following day, right? So it's like, well, what? Do trends not exist? Like what? I don't understand, you know? Value migration, hint, hint. This is a big deal. This is something that actually starts to help provide edge to us as traders. So it's very simple. In this case, I highlighted each of the value areas. This is what we would call value migration higher. Okay, pretty simple. This is what we would call overlapping to higher. Okay, you can see the value areas are overlapping from day to day, but we're still drifting higher. Okay. This led to a day 4 gap up. if you imagine these as candlesticks or open, high, low, close bars, that would really not clue you in to the potential bullish pressure building on this. But if you look inside the bars, if you can see where price is spending the most time, where volume is building, this alerted us to value migration higher. Whereas we were looking at that, we might say, man, this market's going nowhere. There's nothing to see here. Okay, just comparing the high and low, and perhaps the closes too. In this case, the closes were higher, but I can tell you plenty of times where the market on day 3 here would have kind of a late day break and close at the lows, but it's just creating excess down there. It was taking out a poor low, and then we come in Monday and it's gap higher. You know what I mean? So it's very interesting. So here's an example of overlapping value. There's really no value migration. We're essentially forming a balance, right? We're not really doing anything. This is a tough question here. You got to really take what we've talked about and go deep. What else can you tell me about this situation here from a market profile perspective?
The rally is getting bigger.
That's true. We did go higher on during one period, an early period of the second day.
Got it. Same poor low.
Bingo. Very nice eye. Very nice. We had a poor low here, and this day actually kind of compounded it, right? If we were to merge these 2 days together, you would see 3 ticks at that bottom and excess at the high. I can tell you we gapped down on the following day.